What is up, everybody? Today is Monday, September 9th. We have good news and bad news on my trading day. Good news is that my Apex accounts are all green, and those are my live funded accounts. Bad news is my Top Step evaluation account is deep red again. I took a couple of bad trades on that one and some mistakes on it too. So going into the day, I was bearish overall. If you look, we have a huge downtrend occurring here on the 4 hour. We didn't get that weekly close above this like I wanted it to be. You see we closed like literally right below it. And overall, I also had marked out this weekly level here, which is a bullish fair value gap that we had on the weekly chart. If we ended up getting a close below it, we were going to get more downside because this bullish fair value gap then turns into an inversion fair value gap, which is what we have now. We also have a daily inversion fair value gap right here. There's the beginning of it. So I figured price was going to potentially move up into this level before moving back on down. We were also sitting inside this 4 hour fair value gap. Sorry for this mess. It'll get more organized as we continue to move down into the lower time frames. But I noticed we were inside this 4 hour fair value gap right here, actually bouncing off of this 4 hour fair value gap that we have as well. So it made sense that price was going to come up in here and reject off of this at some point. So that's when I dropped down into the 1 hour time frame, marking out any significant fair value gaps there. We had a bullish fair value gap right here and a bearish fair value gap right there and a bullish 1 hour fair value gap too. So the thinking that I had this morning was that price was going to move on up like it did here into here, create some kind of structure, and then drop down like this. So clearly we did not get that. Price did move on up here, but it did not reach this target down there, which is where I wanted to hit. And so I also looked for the 15-minute time frame to see, okay, although I am bearish, where is my invalidation point of where I would switch to go bullish? So I wanted to see a 15-minute candle close above this level right here. Okay, if we ended up getting that, then I was going to switch to being bullish. And I did take a long trade preemptively, which was wrong on my end. I did not wait for that 15-minute candle close. This price action these last couple of days has been testing my patience hard. So that has been unfortunate for me lately. But regardless, still coming out green, still being disciplined. I get shaken out on the first trade or two, and then I get back into my groove after the fact. So I have to be a little bit more patient in this market. So here we go, right? Like I said, if we get a 15-minute candle close above there, I could see us definitely trying to come up at least to this 15-minute fair value gap. So that was my plan. That was my plan this morning. Now I just needed for it to execute on the 1 minute time frame. So first things first, market had accumulation for the New York AM session, manipulated down in the pre-market. And so I was expecting a distribution on up. Now I figured going up into this 1 hour fair value gap was enough of a distribution for it to reject off of. And so this was kind of like my A+ setup here. I noticed that, price was accumulating. We manipulated on up. I had marked out this 1 minute fair value gap that I wanted to have it become an inverse fair value gap. And I also noted this 1 minute fair value gap right there. I actually have that off. Here you go. Now, price came down and invalidated this 1 minute fair value gap right at the open. Now, I did not take this trade because it was in the manipulation phase. So that was good on my end because that would have gotten quickly stopped out. Then price just continued to consolidate in this area and eventually reclaimed that inversion fair value gap. Now, when it did that, I took my short position right at that and I put my stop above this high, and very quickly, a minute later, I got stopped out. Okay? That was okay. I mean, kind of, because it had already been invalidated once. I should not really be reusing it. I've done that before and it has worked out in the past, but it's not high probability. Okay? I did tap into buy side liquidity. It tapped into a higher time frame PD array, two things that I usually look for, and it was fitting into my higher time frame context and narrative that I was going to trade. So I should have waited. Okay, I should have waited for a 15-minute candle close next to want to go long, right? I wanted to see price close above this level that I have marked out right here. Price had this energetic move on up. It was respecting this bullish fair value gap. And so this started to make me a little, you know what? We're going to continue moving on up. I got a little antsy with it. So when price retraced into this 1 minute fair value gap, I market ordered in, and I had a average down right here at this bearish inverse fair value gap. I thought Q4 was going to end up becoming a continuation of what happened in Q3. So I had marked out inverse this, thinking that it was going to end up becoming an inverse fair value gap, and unfortunately it did not. Q4 ended up being the reversal quarter of this move right here. So I got stopped out right down there at this low. And here is when I switched. So I took 2 trades on Top Step, and that was it for me. I don't trade it anymore. Then I switched over to my Apex accounts, and that was when I looked on the 15-minute time frame. I noticed, hey, we did not claim this level. Okay, that 15-minute fair value gap is still holding us. So what I did on my Apex accounts, I took a short right here. I put my stop above that high up there, and I had some take profit right here at this low. And you can see price just completely dropped hard down into that level. And then it just started to come down to this 4-hour fair value gap. My target ideally was this 1-hour fair value gap, which we got so close to, but unfortunately did not get. The one thing that I missed was the fact that this 4-hour fair value gap was sitting at midnight open. Okay, we know midnight open is a good place for price to come down and potentially bounce off of. And that's obviously what price ended up doing. And I got stopped out on my runner there. And then here, clearly I tried to go short again, thinking that it went into a 15-minute fair value gap, that it was into that 15-minute fair value gap once again, and it was going to reject it. And I just took a trade unnecessarily there. I sold, because of that inverse right there, I put my stop above the high, and I got quickly stopped out on that one too. That was not right of me to do on Top Step. I was kind of annoyed at the fact that happened. But here is what I noted after the fact on my after the Top Step trade. I noted on the 15-minute time frame to see what was happening, that we came down and then aggressively got bought back up. And I should have waited until 2 o'clock. I should have waited until a 15-minute candle closed above this level here. Okay, and as you can see, we got that candle closure right there. Okay, and I'm trying to see something here. Is this the right time frame? Yep, it's New York. So right here, we got that 15-minute candle close above that level right there. And so that could have made us want to go up. If price was going to end up rejecting, it should have rejected in this area. Now, let's say we want to be super conservative. We have one 15-minute fair value gap right there. Let me take off everything so you can see it. We have one 15-minute fair value gap right here, and we have a second 15-minute fair value gap right there. If you want to be super conservative to say, you know what, I'm going to wait for all of the bearish PD arrays to get violated, you would have wanted to wait for this candle closure right here, okay? That would have been this candle right here. You would have started to look for a long entry at 12:30, okay? Keep that time in mind. So dropping down to the 1 minute time frame, we go to look for where is 12:30. Essentially, the way I do it is I saw that first one, and so I took it on one of my accounts here where I just got in when I noted this bullish fair value gap got respected, and this was after I had already gotten stopped out. I entered around here, I think, shortly after it, and I put my stop below that low, and I was targeting the high of day as my final TP, and that was a 3.2 risk to reward. And then, like I said, 12:30, right? If you waited for after 12:30, wait for some kind of retracement to show a bearish fair value gap on the 1 minute time frame, as you can see right there, And then the minute that that bearish fair value gap gets invalidated, the higher time frame is bullish, and you're waiting for the 1 minute to align with that, you enter in at the invalidation of that bearish fair value gap right there, put your stop below that swing low that was created, and then target that drawn liquidity right there. So this first trade was a 3.26. This trade was a 1-3. These two trades put my other PAs on Apex back to green. I was red on those too because I took some of those trades that I took on Top Step. So all that to say, patience is super, super, super important. And then also, if you notice, right, it was at the end of it was after 12 o'clock. This is a whole new quarter. This is the fourth quarter for the day, where we would also get some kind of move. All right. So you got to wait for time to align with it, especially if you're waiting for candle closures. And that's what we saw. That 15-minute candle closed above both those bearish fair value gaps. There was nothing holding us from here to high of day. And you don't have to catch this entire move. If you wait for a very solid setup like this one right here, imagine you waited all day, or you woke up late and you came to the charts and you noted that. Boom, your entry's right there. Target high of day, swing low right there. Your stop is only 54 ticks. It's really not that high. But look at where your drawn liquidity is. That's 162 ticks. That's 1-3. Okay, you're obviously going to go in with heavier amount of contracts on this one. But regardless, you have so much confidence. You have so much confidence in the trade. Why? Again, look at the 15-minute. When we closed here, what's stopping us from here to high of day? Nothing. Nothing is stopping us. And if you notice, that move that I caught was just this little piece right there. Right? I missed all of this, but who cares? I caught a 1-3 risk to reward. If you catch 1-3s every day, you'd be set. You'd be set. So wait for those high quality setups. Okay. Here, this first one, not a high quality because I don't usually trade the reclaim of an inversion. Okay. Here, I entered way too early. Way too early. I did not wait for that candle closure. I should have waited for that. And then this one worked out in my favor on my Apex because this was aligned to my model. We got two inversion fair value gaps right here off of this candle. So I market ordered in, stop above that high up there. That one worked out. That's why this one worked out. This one was a little early in the sense that I didn't wait for the second fair value gap, but because I waited for the first one, it still worked out, right? Respect of that fair value gap, stop below the low, target the high of day, drawing liquidity. This one was like the super, super A+ high confidence kind of trade. So it depends on your risk level. It depends on all of that. Okay. So I hope you guys ended green. This one was a bit longer. So this is kind of like a, not a winning trade recap or a losing trade recap. It's kind of like a neutral trade recap. So we'll see what tomorrow brings, guys. It's also a no news Tuesday, I believe. So yeah, let's take it easy. Let's continue to keep our size and risk down so that we're not blowing up our accounts either. So take care, everyone. Peace.